Hey traders, welcome back to Divergence Trader channel. Today we are diving into AMD cycle, if you have heard about it. If not, I have to tell you it's a very important topic. It stands for accumulation, manipulation, distribution. That's a key concept for understanding how markets move. If you're a trader looking to decode smart money behavior, this video is for you. So stick around, hit the like button, and let's get started. First let me make this smaller. But first I have to tell you more about the AMD definition. The AMD cycle is a framework used to explain how institutional players like hedge funds, big monies, whales, whatever you call them, market makers, control price movements in stocks, forex, or crypto. All of these markets, financial markets, have some kind of institutional money, big players, market makers and whales sometimes. And it's all about how smart money accumulates positions, manipulates prices, and then disputes their holdings for profit, more profit I mean. Let's break it down. Accumulation. Big players quietly buy up assets at low prices without spiking the market, and this is what they should do without us knowing it. And manipulation, they shake out weak hands with sudden price moves to trap retail traders, and this is where they trick us. Distribution, they sell their positions to retail traders at higher prices, locking in profits, and that's where you shouldn't get stuck. So we have to know how these smart money, these big players play with the market, so we don't get tricked. This cycle repeats over and over, and spotting it can be give us an edge to trading. So it's very important to understand and spot these cycles. Let's go to accumulation phase first. Accumulation is where smart money starts building their position. Imagine a stock trader, imagine a stock trading sideways that you are watching right now, a range with low volatility, not so much money in it, and it seems so boring, and actually that's the point. Being boring is the point. Institutions buy gradually to avoid drawing attention. This is where you have to see the flags. First of all, you see the flags, then you go for the manipulation phase. But before that, you have to be aware of the signs of accumulation, the key signs. Sideways price action for several candles. It can stay for hours, minutes, whatever time frame you're looking into. These AMD cycle can happen in all time frames, but it's very important to know sometimes it can in big time frames it can stay for weeks even. Okay, so in whatever time frame you are, you have to find sideways price action for several candles. Decreasing volume, you see that okay, the price is going up and down. You can spot a resistance and a support level, and the price moves between these two levels, but there is no volume, and you can understand that this is the accumulation. And the support and resistance obviously are holding strong. These are the key signs for accumulation phase. And about manipulation, the place that we get tricked if we don't get the signs. This is where things get tricky. Smart money wants to scare retail traders out of their positions. They might push prices below key support levels, or vice versa, moving it up and breaking some resistance levels. If they want to go down, the smart money may want to decrease the prices or increase the prices. Whatever they want to do, they do the opposite in manipulation phase. Sometimes they do both, but the opposite side is definite because they want to shake the weak hands and they want them to sell their positions to them. If they want to buy something, they want to buy cheaper. If they want to sell something, they want to sell it at a higher price. So what are the red flags and signs, key signs of manipulation? They are sudden, unexplained, and like spikes and drops, you know, in prices. They are high volume, on the move, but they don't have any follow through. So you see a spike with big volume, but the follow through is weak. If it goes up like a spike with high volume and then you see very weak follow through with no volume, it means you have trapped, or maybe hopefully not, but that's a trap, manipulation trap. So price quickly reverses back into the range. It goes up from a range, but it moves back into the range again. These are the key signs of manipulation, and they are designed to trap impatient traders. So stay sharp and don't fall for the bait. And finally, the distribution phase. After accumulating and shaking out weak hands, smart money drives prices higher to attract retail buyers. You'll see strong uptrend if it's uptrend. It can be downtrend as well, a fall or rise, but then price starts stalling, like double tops or double bottoms, head and shoulders or reverse head and shoulders pattern, all these things. I'm not a fan of patterns, honestly, but you can see these patterns in the end of distribution phase. And what are the signs of distribution? Price hits resistance and struggles to break through. Volume drops as momentum fades. News hype often peaks to trick retail traders to take the opposite thing. What I mean, I will tell you now on the charts. Let's go to this chart. Okay, I have this range here. You can see the price moves between these support and levels. This is the support, this is the resistance, and here you can see coming down below these wicks and shadows with these very strong candle, and here is the follow through that is not very strong, and then in the opposite side the real move starts. You can see this as the real move. Okay, this arrow is too thick, sorry. So this is the real move, this is the distribution phase, this is the accumulation, and this is the manipulation phase. Okay, so you have to be patient. When you see this, you don't trade, you don't get into any short or long position. When you see this, you just wait. You don't get into short position with seeing just one big candle dropping heavily, but you wait for the follow through. The follow through shows signs of manipulation, so you don't get tricked. You wait, you see the other side of the move, which is going up, and here with this candle, if I want to show it like this, this candle shows that the real wave and the real movement has begun. So here you can get into a long position and wait for something like a divergence on the top. We will speak about it, or a double top pattern, or whatever you know. For example, this is a very easy price action pattern. Actually, it's too late to get out of this position, but anyway, if you have entered here, even here, exiting here is a good place, and you have made a good money out of this trade. Again, the another example, when you drop heavily, you get into sideways most of the time. You see we have a support here, a resistance here. The resistance with this big candle breaks up, but the follow through is very weak, and you see the signs of manipulation here. Again, this is the manipulation, this is the accumulation, and this is the real move. Okay, so you don't get tricked here, and you wait for the real move. If I want to show the all I said in a picture, is something like this. This is the accumulation, this is manipulation, and this is the real move. So if you draw a resistance here and a support here, we have been between these resistance and support levels for a while. Then we have this manipulation spike, and then the real move downward. Okay, and now let's have just a conclusion, which is how to trade AMD cycles. As I said in the chart, we have to spot the accumulation, look for consolidation zones on the charts, something like this. And obviously in the real charts it's not this clean, it's something like this or this. You see, this is I prefer to actually do it like this. Okay, this is something like this or something like this. This is the accumulation consolidation zone on your chart, and you have confirmation over volume analysis. So there is no volume in accumulation. You see price moves between two levels with no volume. Then we have to avoid manipulation. We don't chase all the breakouts we see, like this one and like this one. We don't chase every single breakout that we see. Even if you see the volume goes high, you wait, be patient, and you wait for the follow through. It's very important. And then after the price stabilize somewhere like this or somewhere like this, then you will spot the real move, which is big candles, big volume, and most of the time in the opposite direction of the manipulation. So that's the place you get into trade and you enjoy the ride. Okay, I think we had a good understanding of AMD accumulation, manipulation, and distribution. This is how the smart money makes profit, and we shouldn't be the small fish that the whale eats. We can be small fish that follow the whales. I hope you enjoyed this video. I hope you stay subscribed, and please hit the like button and leave some comments for me. It supports my channel, and I can find more friends like you. And if you know someone who is interested in the same content, please be generous to share this content with him. Thank you so much. See you very soon.